What's going on, everybody? This is Phil with Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to go over a dividend stock that I have just bought more of. I have this one in my position right now, and I just recently added to it. But with that being said, let's get started, and let's see what this stock is that I created a bigger position for. Before we get right into the video, guys, if you guys can, just please make sure you smash that thumbs up button. I really do appreciate it, and it really does help out the channel. Also, if you want to join the family, hit that subscribe button down below. We are growing here every day, and we post on here at least 2 times per week with videos such like this one. We post anything that has to do with investing, stock analysis, day trading, swing trading, anything that has to do with investing you can find right on this channel. But with all that being said, let's get started and check out what I have added more to my portfolio. The stock I added to my portfolio more is none other than Intel. Ticker symbol is INTC. Intel has dropped about 9% in the past month or so, and I think it represents a good buying opportunity. Intel is currently trading for $48.96. I will go over how much exactly I bought and how much Intel I own in my next video, which is going to be my October dividend portfolio update video. So make sure you guys stick around for that one. Make sure you guys subscribe to the channel and turn your post notifications on. That way you will get notified when I do post that video. But let's hop right into Intel and see exactly why I think it is a buying opportunity. Intel Corporation designs, manufactures, and sells essential technologies for the cloud, smart and connected devices for retail, industrial, and consumer uses worldwide. The company operates through DCG, IOTG, Mobileye, NSG, PSG, CCG, and all other segments. It offers platform products such as central processing unit and chipsets, and system-on-chip and multi-chip packages, and non-platform or adjacent products comprising accelerators, boards and systems, connectivity products, and memory and storage products. The company also provides Internet of Things products, including high-performance compute solutions for targeted verticals and embedded applications, and computer vision and machine learning-based sensing, data analysis, localization, mapping, and driving policy technology. It serves original equipment manufacturers, original design manufacturers, and cloud service providers. Intel Corporation has a strategic partnership with MILA to develop and apply advances in artificial intelligence methods for enhancing the search in the space of drugs. The company was founded in 1968 and is headquartered in Santa Clara, California. Intel has steady revenue growth from the past 5 years, from $62 billion in 2016 all the way up until about $78 billion in 2020. Intel has a market cap of $195 billion with a PE ratio at a very small 9.5. Now, Intel is known as a dying company, but I beg to differ with looking at these stats. The price to cash flow is a low 5.85, and the price to book ratio is a really low 2.21. So like I said, Intel had revenue of $78.5 billion last year, and they have $35 billion sitting in total cash. They have about $35 billion in long-term debt and $6.14 billion in free cash flow. Now, dividend also, with all of that, they do pay a dividend, and they have been paying this dividend for quite some time. Intel has a current dividend yield of about 2.84%, which is an annual payout of $1.39 per share. They have a small payout ratio of 26.3%, which is leaving them with room to grow. With them having several and abundance of free cash flow, they definitely have room to grow their dividend. Their 5-year growth rate is 6.12%, and they have dividend growth for the past 7 years. The INTC, Intel, pays their dividend on a quarterly basis. The reason Intel has dropped after earnings, it fell about 9% after it announced earnings, is because investors believe they are losing market share to AMD. But Intel has strategically been focusing on other chips, and they prepare to expand their company in order to bring in more revenue. We are repositioning Intel for growth to be a long-term growth company. Near term, we could have chosen a more conservative route with modestly better financials, but instead the board, the management team, and this is why I came back to the company, choosing to invest to maximize the long-range business that we have. For gross margin, with the impact of our investment in capacity and the acceleration of our process technology, we expect gross margins between 51 and 53% over the next 2 or 3 years before moving upwards. So that is a little bit lower gross margins that investors expected Intel to report, but I do believe that they will be reinvesting their money to grow their business long term. So for the next 2 or 3 years, they will have lower gross margins, but I do believe that Intel will be able to pick it back up after that and bring their gross margins back to 55, 56, 50, even up to 60% or so. Intel's stated mission over the next few years is to regain its leadership position among chip makers, as smaller rivals like AMD have chipped away at market share with smaller transistor chips. Intel reported third quarter net income of $6.82 billion, or $1.67 per share, compared with $4.2 billion, or $1.02 a share in the year ago period. After adjusting for acquisition-related expenses and other items, Intel reported earnings of $1.71 a share, compared with $1.11 a share from a year ago. Revenue rose to $19.19 billion from $18.33 billion in the year-ago quarter, snapping a streak of 4 consecutive quarters of revenue declines. Excluding the company's divested memory business, revenue came in at $18.09 billion. Analysts expected adjusted earnings of $1.11 a share on the revenue of $18.24 billion, based on Intel's forecast of $1.10 a share and revenue of about $18.2 billion. Revenue in the import and data center category rose 10% to $6.5 billion, but fell short on the street's estimate of $6.667 billion. So I think with these revenue numbers, Intel is primed for growth, and they will be focusing more on the long-term business. So right now, it is the perfect time to load on the dip, and that is exactly what I do. I will reveal how much I loaded up on in the coming video, and when I do my stock portfolio update and my dividend portfolio update coming the end of the month. But if you guys did enjoy this video and took anything away from it, if you guys can, just please smash that like button. I really do appreciate it. It does really help out the channel. Also, join the family. Hit that subscribe button down below. Check out any links in the description. They do support the channel, and you get some free stuff out of it, so it is a win-win for you and for me. And I want to thank you all for watching this video, and I will see you in the next one. Peace!